as many of you at Kin Global know, we travel around the world right from this very room. And for the next half hour, we will be turning the focus to Africa. According to the World Bank, economic growth in sub-Saharan Africa is on the rise in 2017. The continent's aggregate growth is expected to rise to 3.2% in 2018 and 3.5% in 2019. Of course, economic growth is only one indicator, and Africa is a very large continent. In fact, there are 54 countries currently in Africa. So today we have the unique opportunity to hear directly from two innovators who have a lot of experience in many different countries in Africa and can help us parse what the opportunities and challenges are of building an entrepreneurial ecosystem in Africa. So with that, I'd like to start with Euler Bropleh and introduce him. He is the founder and managing director of Vested World. Vested World is a venture capital firm that focuses specifically on emerging markets in Africa. So Euler, can you start us off by telling us a little bit about Vested World and what it does and how you started it?
Yeah, thank you. It's an honor to be here. I first came to Kin, it was 2015, and this is my third one, so it's an honor to be speaking before all of you. So small backstory, I'm originally from Liberia and always had an interest in development in Africa, Liberia specifically, but the continent more broadly. And after practicing law for a while, kept thinking, what can I do to have more of an impact on the place where I'm from? And really started looking at what was going on in the financing landscape. Saw that there was really just a dearth of capital available to early stage businesses that have the ability to scale and become larger enterprises, employing a lot of people and paying them well. And so wanted to find a way to contribute towards that. And so that's what led me to set up Vested World in 2014. I had been making investments personally in companies that I had found, and got to a point where I was seeing really interesting, promising opportunities, but I didn't have enough capital to do those deals on my own, and wanted to find a way to get more people investing in the opportunities that I was seeing on the continent, throughout the continent.
And which countries are you currently investing in?
Yeah, so we've made 6 investments so far in Kenya, Uganda, Nigeria, and Ghana. Our primary focus is Ghana, Nigeria, and Kenya, and secondary countries are Uganda, Rwanda, Tanzania, and Ethiopia.
Wow, so you're spanning East Africa, West Africa, and the Horn of Africa with your company. That's fantastic. And next I'd like to introduce Njideka Harry. Njideka is president and CEO of Youth for Technology. So Njideka will cover the nonprofit side. It's a nonprofit dedicated to providing technology and business training programs. Njideka, first of all, welcome back to the Kin Global stage. Can you tell us, for those of us who don't know, a little bit more about Youth for Technology and why did you start this nonprofit?
Sure, thank you so much, Stephanie, for that very humbling introduction. It's always wonderful to be back here at Kellogg. Like Euler, this is my 3rd time here per the invitation of Professor Wolcott, and I'm certainly very humbled and honored to sit in front of you this morning and share our story at Youth for Technology. Youth for Technology Foundation is an international nonprofit, and we work at the intersection of appropriate technology for development. We work in education as well as entrepreneurship with a focus on young people, primarily between the ages of 8 to 25, and women entrepreneurs living in low-income and or developing countries. Our focus is on the African continent, which is where we started our work about 16 years ago. I founded the organization. At that time, I was at Microsoft and really founded the organization, sitting at a cubicle in Microsoft with a couple of friends that were from the continent and wanted to, in essence, give back. We became a 501c3 in 2001. I left Microsoft in 2006 to focus on the organization full-time. In any event, when we started our work, we started in Nigeria, specifically in the Niger Delta region of Nigeria, a region that is historically, oil-ridden. There have been a lot of oil catastrophes and just a lot of focus because it's a restless region. There are large amounts of young people, but these young people do not have access to jobs, and they certainly do not have the skill sets to fill those positions. So we started our work there. And about 4 years into working and co-developing content and curriculum that used information and communication technologies in education and entrepreneurship, we heard from our young people. They said, our mothers can actually use this information you're providing to us. Our mothers, women in the community who are really the economic backbone of the communities we serve. Our mothers reinvest 90% of their household income into our health, into our education. They are the economic backbone. They can use these life skills that you're teaching. They can use these entrepreneurship skills that you're teaching us. And so we began co-developing and programming, joint programming with women entrepreneurs across Nigeria. To date, we've trained and impacted over 18,000 women entrepreneurs across 4 primary segments. We work in retail and wholesale, light manufacturing, social services, as well as health services as well. So those are really the 4 kind of areas that we look at for these women entrepreneurs. We implement our training through classroom workshops and training, networking events, industry tours, as well as using technology like SMS messages to educate those women entrepreneurs as well.
Just to give us a little idea, since you brought up women entrepreneurs, what's the landscape like for them? Are there any specific challenges you see that they face as women entrepreneurs?
Absolutely, there are challenges.
Like how much time do you have?
So they face, women entrepreneurs across Africa. So we work in Nigeria, Kenya, Uganda, and we've seen across Africa, women entrepreneurs face enormous challenges, not by their own doing, but just because of the ecosystem, the way it's designed, the lack of support from the public sector and even the private sector to help them to enable their businesses. But all in all, we found that these women are driven mostly by necessity, looking for ways to be able to support their family, have the flexibility, and really have that income generated in their communities, leading to more sustainable communities. Actually, MasterCard just issued a report in April, which is really the MasterCard Index for Women Entrepreneurs, and it cites Uganda out of all the countries in Africa as having the highest number of women entrepreneurs, the most enabling, and that's about 34.6% of entrepreneurs in Nigeria or in Uganda are women. And so really starting to look at the enabling factors that exist in that continent that make it more likely for women to propel as women entrepreneurs, which include things like government and private sector and that win-win structure.
Excellent. Euler, when you think about the countries where you invest in, what is the entrepreneurial landscape like?
The entrepreneurship landscape is extremely robust, and as Njideka said, it's primarily based out of necessity. A lot of people don't have any other option other than to start their own business. In most of these countries, anywhere from 60 to 80% of the population relies on agriculture in some form for their livelihoods. And so most of these people have small farms. They're growing some crop that they end up selling. The traders would then sell it into the market, or they're selling goods in the market. So entrepreneurship is really out of necessity rather than a strong desire for people to build their own businesses.
Okay. And then how do you decide, or what do you look for when you decide whether or not to invest in a company?
Yeah, it's really a lot of the same things any investor here would look for. First and foremost, it's the people that are running the business. We're not involved in these businesses day to day, managing them, and so we need to be able to rely on the management team. And one of the things we found in the businesses that we've invested in is most of the entrepreneurs, I think we've always thought about developing countries experiencing what's called the brain drain, where the intellectual class and educated professional class move out of the country to a more developed world for better living standards. Now what we've started to see is the brain gain. People in Njideka going back to wherever they were born or where their parents were born, looking for opportunities and building businesses. And of the 6 companies we've invested in, 5 of them were founded by people who were either from those countries, left and were educated abroad, and have since returned to build their businesses. And these are like highly skilled people. Like that. And just as an example, one of the entrepreneurs we invested in is a Kellogg grad, worked for Rolls-Royce in their engineering department, worked for Deutsche Bank. His co-founder worked for Schneider Electric, also went to Kellogg.
So this guy had a great career going.
Right.
I mean, he could have just sailed through.
Right.
Yeah.
He had a great standard of living here, but decided that the opportunity in Nigeria was much greater for him, and he made a lot of personal and professional sacrifices to do that. So we look at the management team, we look at the market opportunity. There has to be a robust enough market for whatever the product or service that the company is making or doing in order for the investment to make sense. We look at the broader landscape within that country, the regulatory environment, and other infrastructure requirements that will help enable the business to do well. And yeah, so those are probably the 3 primary things that we look up, but there are a host of other.
And this Kellogg alum, what type of company has he created? And you said in Nigeria, correct?
Right. So it's an energy management solution company. The corollary here in the U.S. or the more developed world is Schneider Electric or Internoc. And what they started off doing was, most businesses in Nigeria rely on generators for up to 80% of their power. And most of them have generators that are much larger than they actually need. And so they're spending 30 to 50% more on diesel costs than they need to be. So initially these guys would go in and say, we're gonna assess your energy consumption and show you how you can save money by downsizing your generator and making more other efficiency solutions.
My sustainability heart loves that.
Right.
Save money and be better for the environment at this
Exactly.
point. It's fantastic.
And then they've evolved to now they are building renewable solutions mixed with traditional generation sources, so solar mixed with a battery and a more efficient generator to help companies and organizations significantly reduce their costs of power. So they just finished a project for the Nigerian Air Force where they built all the energy solutions for a new school. They've got 3 more projects like that, and they're also building the smart grid for one of the largest power distribution companies in Nigeria. So
these are not small projects.
These are not small projects.
Njideka, do you have, just to understand a little bit more how Youth for Technology works, do you have a kind of a story of one of the clients that you've helped, or?
Absolutely. So, one of the things that we look at, of course, in addition to providing the business skills and financial capability skills for women entrepreneurs in particular to grow their businesses, we look at what exists in the environment. And with the transcend of technology, of course, Africa as a continent is really a mobile first continent. We leapfrog the desktop environment altogether. Is what opportunities exist within the mobile space to really enable these entrepreneurs to grow their business. And one of such opportunities is access to online markets. A lot of the women that we work with, if they have the financial capabilities and the financial skills training and know how to access online markets and have the essential assets to do so, they can, in essence, upmark their products for as much as 50 to 100% or what have you. I'll share a particular story. A woman entrepreneur we've worked with since 2012. Her name is Afoma, and Afoma owns a customized boutique for Africa-centric products. It's called Afrocentric Boutique, and it's located in Akwa Ibom, which is a region in the Niger Delta in Nigeria. About 2 years ago, we began work with 3D printing technologies in Nigeria and have since trained some of the women entrepreneurs that we work with to start to look at customizable products in their businesses using 3D printing technologies. we're not necessarily asking the women entrepreneurs to, know exactly how to use computer-aided design models or what have you, but we're pairing them up with other younger women. For instance, Ms. Afama was paired up with an 18-year-old student of ours called Precious. And so what Precious does is she uses computer-aided design to design models and products that Mrs. Afama then uses in her business. And so we've seen just a tremendous amount of interest from Mrs. Afama's customers in the sense that her customers are now excited that they now have customizable products. She's thrilled about the power of 3D printing to really help her unlock this innovation in her business and access really the global economy through online markets.
Fantastic. So I wanted to take a moment to talk about challenges. I'm sure people in the audience have a couple that they think of when they think of Africa. What is the biggest challenge that you face in kind of developing your entrepreneurial ecosystem? Euler, would you like to go first?
Yeah, so I think they're twofold. On one hand, when we talk to investors, they're concerned obviously about the risk associated with investing in these countries, and we got asked the same question so often that we started referring to them as a fierce risk, FIERCE. So that's fraud, instability, expropriation, regulatory risk, currency risk, and enforcement of contracts. So those are all things that, so that's like the framework we think about when we're thinking about the risk associated with each of our investments and each of the countries that we invest in, because these are more macro-ish, with the exception of fraud. These are more macro risks than they are like just to that particular business. So that's on the investment side. I think more
but
than...
how do you get around that? I mean, because I live in Colombia now, and and when people talk to me about Colombia or invite them to Colombia, the first thing that they think of is narcos.
Yeah.
And Colombia is so much more than that, and there is so much opportunity. And in fact, we see lots of companies come into Colombia now, and they're kind of, they know that this is the time to come in, and big risk, big benefit. So how do you answer that?
It's exactly like most things. Perception. There's a difference between perception and reality, and what we try to do is just help explain what that difference is. So with something like enforcement of contracts, most of these countries have signed agreements to honor arbitration rulings. So all our agreements have an arbitration provision in them.
So you cover the
So
legal
we
aspect
cover the legal
up front
aspect.
before.
Right. And in a country like Kenya, a case has gone up to the Supreme Court where someone tried to enforce an arbitrator's decision. The decision was made in London, tried to enforce it in Kenya. Initially, the person that was liable refused to comply. They were sued in Kenyan court, went to the Supreme Court. The Supreme Court said the arbitrator's decision stands. And so most people don't know about those types of occurrences. And so we try to explain that to investors. On the fraud end, we need to get to know the management teams that we're investing in and be able to trust them and have an understanding with respect to what's acceptable and what's not acceptable. I don't think it's any different than any investment you would make here. I mean, we hear stories now about like how many people were exempt from the conflict of interest laws in the White House, how many businesses and banks have been accused of corruption here in the U.S. Africa doesn't have a monopoly on moral turpitude. Like it's everywhere. So that's how we think about those risks. On the other side, the biggest challenge for us is access to capital. Most of these companies are struggling to get capital. The company I mentioned earlier, Beacon, when we first started looking at them, they had 1.2 million in revenue. They couldn't get bank financing, and very few investors would invest in them. No institutional investor would invest in them.
Wow.
And so that's a huge challenge when you have businesses that are showing traction and have the ability to scale, but the only thing holding them back is access to capital. There's nothing more challenging than that.
And to me, it seems like both of you are bridge makers in a way. You're providing that bridge between people who have capital but don't understand the situation and the companies that need it. Yeah, very interesting. Njideka, is there any particular challenge that you face that you didn't expect, or?
Well, I'll just add to Euler's point in a second. I mean, he mentioned, the business and access to capital. And, I don't want to make assumptions, but if you look at the management team of XYZ company, it's primarily male, and they're still having challenges with access to capital. In the sense of women entrepreneurs, those challenges are even steeper. Many women entrepreneurs don't even think about going to the banks, the financial institutions in most cases, because they're just not confident enough. They don't really think that their businesses are capable, just because of some of the gender and cultural stereotypes that still exist for women entrepreneurs.
And even legally, I mean, I know that in some countries it's much more difficult for women to say own land.
Yes.
And if you don't have collateral, it's
Yes.
tougher to get a loan.
Absolutely.
So, how do you get a loan if you don't have collateral, and legally you can't own that collateral?
Absolutely. One of the entrepreneurs we work with in Lagos is a shoe designer, and one of very few in a male-dominated industry. And I remember having a conversation with her a couple of weeks ago. She's unmarried, and she mentioned she went to the bank to seek capital, and the first question she was asked is, "Where's your husband? You don't have a husband, come back when you do." And so, these stereotypes still exist. And, part of our role, in addition to providing the education, is changing some of those cultural mindsets as well.
So, I'm not sure, how much time do we have left? Do we have left time for, oh, look at that. Oh, great. So, are there, where do you want to be in 5 years? Euler?
Back here at Kin Global.
That's the first, yeah.
What are your grand plans for Vested World in 5 years?
There's a few. There's plans related directly to Vested World and plans for the marketplace at large. I think for the plans for Vested World, it's fairly obvious. We want to grow, we want to invest in more companies and do all the good things we're already doing. For the market at large, I want the people in this room and the broader community, international community, to realize the opportunity we have in these markets. Yesterday, there were two comments that I thought were really interesting. Rob made a comment talking about much of life is an accident, but we have the foresight to take advantage of it. And Bill Collins talked about their process, about how they, before they start any project, they go in a room and look at research and look at what's been done and look at how other people have solved the problem. I think there's nowhere in the world where we can use our prior experience more than in various African countries. If you look throughout history at how countries develop, how economies develop, they follow the same trends. It starts with agricultural development because most people are engaged in agriculture. Then as the agricultural sector becomes more productive, those people that know the labor force that's no longer needed shift towards manufacturing. And then as manufacturing becomes more efficient, labor costs rise, more and more people shift towards services and technology. The same thing has happened in every country, bar like a few exceptions. And so knowing what we know, we should be focusing on these sectors and this trend in other markets. We have the foresight. It's already occurred elsewhere. We can take what we've learned from there and apply it here. And it's already happening to some extent. So a couple of transactions that's happened over the past few years illustrate this. Kellogg is in the process of setting up a processing facility in Nigeria. They're going to be setting up a cereal factory to make cornflakes. They bought a grain processing and distribution company, paid 50% for $410 million or so, and that was 15 times EBITDA for that business.
Wow.
In the developed world, the multiple range may be 8 to 12. So they're paying a premium to acquire a significant stake in this business, in this market. And their goal is we want to be able to source locally in order to make cornflakes for this market. Same thing with Coca-Cola. Coca-Cola has been in Africa for close to 100 years. Yet they bought a Nigerian juice company called Chi. Again, paid, I think it was $250 million for a 40% stake in that business. That was depending on who you talk to, anywhere from 12 to 20 times EBITDA.
So there's this real move.
Yeah, and it's like, why is Coca-Cola doing this?
Yeah.
Well, it's because, one, even though they're in these markets, their products aren't reaching all the consumers, and they want access to more consumers. They want local supply chains, and they want local expertise. Most of the managers that run Coca-Cola are people that rotate through these markets. And by acquiring a business like this, you're gaining access to a team that's from the region, that knows it well, and is dedicated to staying there. And so I think people in the room, you guys that are at large companies and thinking about how do we grow, growth in the US and other developed market maybe in the low single digits. Companies like Unilever are experiencing, and Danone are experiencing 7-8% growth in these markets year over year. Last year, Unilever increased their revenue, I think, by 20%, and that they've had that for the last 3 years. So there are real opportunities in these markets, and you can take what you've learned elsewhere and apply it for the local context.
That's great. I was just going to ask you what advice you have for companies in the room, but you already gave it. So thank you so much for beating me to it. So since we have a little bit of time, Njideka, instead of asking you where you want to be in 5 years, I thought I would ask you to give an update on Youth for Technology. You said something very interesting, but we didn't get into it very much. You've now taken what you've learned in Africa and transferred it back to the United States. Can you tell us a little bit about that?
Well, this is in the space of technology and education. So the work that I've just described is with technology and entrepreneurship, of course, working across a couple of countries in Africa. But last year we began our U.S. programming. So we are a startup, you could call us that, in the U.S. And what we're focusing on in the U.S. is the technology piece of education. And so our U.S. offices are located in Louisville, Kentucky, actually in West Louisville, where 83% of the population is in poverty. And what we've done,
83% of the population is in poverty.
Yes.
So make no mistake, in many rural places in the United States, it is like a developing country.
Absolutely, absolutely. And so what we've done is we launched 3D Printing Academy for Girls, which is a program that leverages the power of human-centered design, 3D printing technologies, and other emerging technologies to inspire middle school age girls between the ages of 11 and 14, which is those adolescent years where we've seen a lot of cultural barriers and stereotypes around the pursuit of science, technology, and engineering careers. And so the program is 12, 13 years young. In the US, we are leveraging a lot of our lessons that we learned because we launched a program for 3D printing in Africa in 2014. So our programming in Africa in the 3D printing space is 3 years ahead of the US, but we're still taking a lot of those lessons and a lot of those successes and translating them here as best fit in the communities that we're serving here in the US.
That's fantastic. So, both of you were rather successful people before you decided to be entrepreneurs. Would you have done anything different? Every once in a while, do you, God, I wish I still worked for Microsoft?
No. Not one of those who drank the Kool-Aid. I was explaining to someone yesterday at dinner how a lot of my colleagues at Microsoft are actually still at the company, great leadership, but I haven't looked back. Entrepreneurship is not easy, and even running a nonprofit is still entrepreneurship. Every day is a struggle. We have challenges. I heard a statistic at a conference I was recently at, about the divorce rates of social entrepreneurs. Extremely high. I won't put anyone under the bus here, but just extremely high. So the struggle is real. Okay, we wake up every day and we think about, managing teams, and at the bottom line, we think about the people who are at the center of the work we do. And every day, at the end of the day, driving home is that, did we impact that change that we set out to do? Did we change one person's life? And if so, how so? And so that's very, very important. So I wouldn't think about doing anything else. This is, I think this is what I was born to do, and certainly enjoy inspiring other people and helping them really unlock opportunities up there.
Thank you. Euler?
Yeah, I'm reminded, my wife's still a lawyer at a big firm, and I'm reminded every day what that life is like. And I'm very happy to be where I am in spite of all the challenges associated with doing what we do. It's so incredibly rewarding when you meet an entrepreneur who just has that fire and passion, and you're able to do something to help them along the way and provide support to them. In my professional and personal life, there's nothing I've done that's been more rewarding. So
fantastic. So some of the things that I've heard, entrepreneurship in Africa is driven by necessity, and after all, necessity is the mother of invention. I love the brain gain, thank God. And the mobile first continent, and potentially 8% growth in emerging markets. Thank you guys, and may I say, I love your outfits. Very fashionable people. Thank you.
Thank you. Thank you so much.
Thank you. That's great. Thanks for being back. So Gigi was in my class at Kellogg. She sat right down front, and I quickly wondered whether she should be the one doing the lecturing. I learned a lot from her, and I have to admit, I don't know that much about Africa. I travel all over the world on a regular basis, and I have relatively limited contact with Africa. Stephanie has more experience there than I do, and I've been thankful to be engaged with Euler and Vested World, a small fly on the wall in that journey, because I see Euler as sort of my modest access to the exciting things going on in Africa. Also would like to mention a few programs this afternoon. Stephanie and Pablo developed something called the Negotiation Canvas. Everybody in the entrepreneurial space knows of the Business Model Canvas by Osterwalder. And so they've taken a similar approach to developing a canvas for preparing for key negotiations, which is a field that Pablo's been in for many years. I've played with it a bit myself, and it's quite powerful. They've developed this, they're giving it away for free, it will be available online, and they're going to do a workshop this afternoon on the negotiation canvas. If you would like to join that, please make sure you sign up for that.